Hello traders, 'tis I, the Rumpled One, coming to you on Wednesday, April the 23rd. The year's 2025. Let's talk trading. Stupid with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Maybe I should say these videos are for entertainment purposes only.
And
And
I've noticed a lot of folks are saying that on any type of trading videos. Some folks are actually saying that these are only for entertainment purposes.
yeah. So, as always, have your risk management in place so you don't lose more than you're willing to lose on a trade or a trading session. So, Walmall, before the video, we were trading and we did some stupid stuff.
Well, it depends, but yeah, it's sort of like I told you about my experience of what I got into a trade. I was up like 3 or 4 pips, and the market just laid flat there, and my rules don't say if the market lays flat, get out unless there's a really good reason to go and to stay. But my general rule is if the market goes flat, stops moving in my direction or starts to inch in the other direction, I just go and take my pips. And the reason why I do that is because of the style of trading that I'm doing. The main, and what I mean by that is that I go in there and I try to go and make somewhere between 3 and 5 pips on a trade. That's my goal. That's my stated objective. Make 3 to 5 pips on a trade. Well, if I've made 3 to 5 pips on a trade and the market stops, wouldn't it be smart to get out? Wouldn't that? I mean, you've achieved your objective. Get out. Now, if I was, now on the other hand, if I was the type of trader that's trying to make 10, 12, 15 pips on a particular trade, because that's the methodology that you're using, and you get out at that point, well, that's not very bright because the reality is your whole premise is that if you're trying to make that many pips, on a trade, you're trying to make the 10 or 15. That probably means that you also your stop loss, is probably further away as well. And the next thing hey, yay, I made 3 pips. Yay, I made 4 pips. Yay, I made 5 pips. And meanwhile, you come along with one trade and you take a 15 pip loss, and everything's wiped out. And you went from, I talked to one guy about 2 years ago, and he said it keeps on going back and forth. What do you mean by back and forth? Oh, I make lots of money, and you know, and and then and then uh, and then what happens is that it all gets wiped out with one trade. And I said, I met this guy for a cup of coffee, and I sat down with him. I said, bring all your trades with you. Let's look. And then I looked at it, and he was exactly right. And I said, what? How many pips are you trying to make on a trade? So I'm trying to make 10 or 15. I said, well, why did you get out here with only three? Why did you get out here with only five? Why did you get out here with seven? You know, well, the market stopped moving in my direction. But your stop loss was all the way down here. You're trying to get to here, and your stop loss is all the way down here, and you're just going to get yourself wiped. If you keep on doing that. So method matters. Your plan matters. I guess the stupidity of it is when we don't follow our methods. When I say our methods, I mean I don't necessarily mean heroes or mine. I mean the method that you've put in place. That you sat down, you've analyzed the market, you looked at the statistics, you looked to see what the market likes to do, and then you go and violate it. That's what's stupid. That's where I get into trouble. So like, okay, you know that, with the methods that I'm using, you're only going to make 3, 4, 5 pips. Why are you sticking in trying to get 10? Oh, you dummy! Now you're underwater by 10 or 15. Now you take a big loss.
yeah, yeah, because I've got the my screen up here, and right here is where I went short because at the time we had the M30 was red, and then all of a sudden that candle closed and it had a blue stripe, which on a closed candle like this, that should have been a buy had I waited. Well, then I get in the trade, and Walmart, also known as the Oracle, says goes, sir, you probably don't want to hear this, but the market's going to 19. And sure enough, it did. So I just kept shorting along the way. And then right about here, the market came down and it didn't give me a chance. And then right here, it came down. I could have actually, I think right here, I could have gotten out, but it was a blink of an eye. This strike put in so fast it wasn't even funny. And so then I just kept shorting. And then the news came out, and then I go to exit. And part of the other thing about the stupid is this today, my platform has been nicking me for like point 0.2 to zero point 0.7 pips on a trade. And what I mean is I'll go to exit at one price, and by the time it's the order is filled, it's reduced my profit by anywhere from point 0.2 to zero point 0.7. And I think that happened to me what, 4 or 5 times in a row, Walmal?
Yeah, at least four or five times,
And
and that's
then and yeah, and then the ugly thing is when it finally came down here, it was like I was up something like 3 pips. When I went to get out, it freaking reversed on me, and I think it made me like minus point or 4 points. It was like, really? I sat in that trade for almost an hour to lose, but I more than made up on a bunch of trades, other shorts.
and
But
that's the thing, and the last comment I'll go put on all this, to kind of capstone it a little bit, and that is that, you know, yeah, you got stuck for an hour. Okay, that's fine, but yeah, it's not fun. But at the same time, if you stick to it, you stick to your method, and it's a proven method. What'll happen is over the long run, you'll go and it'll work out fine. So like I was complaining this morning that um, my efficiency was down like 74% or somewhere around there, which means that that's tough sledding. At least for me, that's tough sledding with the type of method that I'm trading. But at the end of the day, I got a ton of pips. It's just that it took me, a long time. And it's funny because like last week I was away on vacation and I traded in the morning while I was away on vacation. And I think I told you, Tiaro, that every day I was making a ton of pips, and I was only trading. You said you're on vacation, you shouldn't be trading. I was basically only in the market half hour, 45 minutes. One day I was there for an hour, and I made a ton of pips, and I had a hundred. I think last week I had 100% efficiency every single day that I traded, and I didn't trade every day, but I traded at least three of the 5 days last week, and it was just my method synced up, with what the market was doing, and you're gonna have days like that, and there are gonna be other days when today it's a rough day. I'm embarrassed with how many trades I've had to take today to go and make dips. But at the end of the day, I made money. And there's more money in the bank account today, this right now than it was when I started. So I can't complain about it. But at the same time, it was a lot of work to go and get there.
yeah, but you
And
were an addict. You used to take 50 pip or 50 trades a day, I think, on average.
I know, but the thing is, I've changed my methodology around a little bit, so I shouldn't have to. And but there's still going to be days that there's nothing. I just pulled it up right now. I got 56 trades today so far. And that's for me. That's normally I had about 15 or 20 trades. So it's so unusual, and my efficiency is down at 75.8% right now. And that's just not, for me, that's a rough day. And the question I have, and maybe there's something people can comment in the in the comments below, and that is this: does it make sense to continue trading on those days? If it's going to be a hard day, I think I suggested to you maybe on days like this one, once you've made a little bit, go out and play golf. Go do something fun. Go play tennis. Go take a nature walk. I don't care what it is. Whatever it is, lights you up.
Right.
And maybe that's just a better way of living life.
Yeah, and
Because I think
oh, go ahead.
I was just going to say, I think sometimes we as traders we wind up getting addicted to our screens, and the whole point of all this is go and try to go and make a living so that we can go and enjoy life. And I think sometimes we miss that portion of it.
Yeah. Well, and the other part, about stupid is if you're sitting there looking at a chart and you're not in a trade, the price does what it does, and you don't yell at the screen, you don't, bang your fist on the table, you don't, use cuss words. You just sit there and you watch. But you put a trade on, I don't care if it's a micro lot. All of a sudden,
The game is on.
it's like you bastards, It's just so funny. Um, and you have to be able to laugh at yourself that you get worked up over it just because you're in a trade. I mean, and the thing is, you have to get to the point where you can disconnect. And I don't know if that's possible to to do that 100% of the time or not, but I do find it amusing. You know, my
Yeah.
the guy I always liked was Mickey Rourke in what was that movie with Kim Basinger? 9.5 weeks, when he was the arbitrage trader, and he's sitting in his office looking at the screen, calm, cool, and collected. Nothing phases him. You don't know if he was up a million or down two. Um, I just thought that was just so cool, but half the
Yeah.
time I'm yelling at the screen. And it's stupid because they can't hear me.
There's that, or the other thing along the same lines. It's sort of like you're sitting there and you've gone short and the market keeps going up. I'm going to go and put a short in now because I'm going to force this thing down. People start thinking like that. They're thinking that let's say you're sitting there, you throw in a 5 lot trade. You think that you have 5 lots somehow. It's going to affect this market in any way, shape, or form. Hey, come back and talk to me when you go and throw down, 500 lots. Then maybe we can go and talk. But, and it's the silliness of some of the things we do. It's like, now at the same time, it's gone against you, and I could see going and throwing in a trade, another trade to go short, not because that you think you're going to move the market, but just because you're trying to get a better average in price. That I can understand that, to a certain extent. That makes sense, if you're because it's the type of thing. Let's say you're down 10 pips and you throw in another trade of the same or same or equal value, and now because you put in a trade now, instead of having to move 10 pips to get to your break even point, now you only have to move 5 pips to get to your break even point. That makes sense to me. So at least there's some thought that was involved. Now the thing is, here's the caution that I throw into the wind there, and that is this: you only do that when you get a clear signal to do it. You don't just do it. It's like, oh, look at that! I got another flip flop. Oh, look at that! I crossed over, the the EMA 5. Whatever your method dictates. And then at least then it makes some sense.
Right.
Just otherwise you can sit there with 35 trades out there and wondering how you're going to pay the mortgage.
Yeah. When you know what, traders, the fastest 15 minutes in trading is just about up. So, you guys have any ideas about something that's stupid that we should talk about? Let us know. But make sure you're not stupid, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.